Welcome to the deep dive. Today we're really digging into the investor story behind Iren Limited. That's NASDAQ. Iren.
Yeah, it used to be Iris Energy, and it's interesting because they're in this major transition right now.
Exactly. Moving from just crypto mining towards being a broader digital infrastructure company.
Yeah.
That's quite the shift. So for anyone looking at Iren, let's get the basics down. They incorporated back in 2018, IPO'd late 2021.
Right, and while they're technically based in Sydney, Australia.
Their actual operations, the big data centers, the hardware, that's all North America. We're talking Canada and Texas mostly.
And that's crucial context, because our goal here is to really map out how they're evolving, how they're taking that initial setup, and aiming it at this massive demand for high-performance computing, mainly AI.
It's not just a small pivot, is it? It feels more fundamental.
Absolutely. It's built on three core parts, three pillars, you could say. They're all connected.
Okay, pillars. Let's start there. Pillar one must be the original business, right? Bitcoin mining.
Exactly. That's been running since, 2019, roughly? That's their sort of cash engine.
The foundation. So the cash flow from that and maybe the operational experience too.
Yeah, that feeds directly into pillar number 2, the AI and cloud services. This is the big growth area, the new focus.
And that's where the NVIDIA hardware comes in.
Yeah.
The H100s, H200s.
Right. Providing that really high-end GPU power that companies need for, serious AI training and running those models.
Okay, so mining, AI services. What's the third pillar holding it all up?
The infrastructure itself, these next-generation data centers, they're building these massive campuses specifically designed for very high power density.
Purpose-built. And they secured the land and the power connections for these.
That's a key part of their strategy, getting that power and land sorted. But the real edge, or what they're positioning as an edge in the AI space,
Go on.
it's twofold, really. First, like you said, securing land and power early, maybe using the mining operations as the justification before the AI gold rush made it super expensive.
Makes sense. Leverage the old business for the new one.
And second, they've managed to get preferred partner status with NVIDIA.
Ah, okay. How much weight does that carry?
Well, in theory, quite a bit. It suggests, better access to the latest GPUs, maybe more reliable supply. In a market where getting these chips is everything, that could be significant. Adds credibility too.
Right, so let's talk strengths for an investor. Vertical integration is usually high on the list.
Yeah.
Controlling the power, land, hardware.
Yeah, it definitely reduces reliance on third parties, potentially lowers operating costs over time. That's the pitch.
But I sense a but.
Well, the but is the enormous upfront capital needed. Vertical integration isn't cheap. It means massive spending on construction, hardware, and probably taking on significant debt. So execution becomes heavily dependent on financing.
Oh, a double-edged sword. What about their power source? They aim for 100% renewables.
They do. And that helps on two fronts. One, it can help manage those huge electricity costs, especially if they secure good long-term contracts. Two, it's great for ESG.
Environmental, social, governance. Increasingly important for big investors.
Definitely. Makes them look better to funds screening for sustainable infrastructure plays.
And financially. How are these strategies translating?
Well, you've got the dual revenue streams now. Crypto mining still brings in cash, though it's volatile. And the AI cloud side is ramping up.
So diversification. Have they shown growth? Profitability.
Significant revenue growth, yes, mainly from the mining side historically. But importantly, they did recently swing to a positive net income, turning around previous losses. That suggests the scaling is starting to pay off operationally.
Okay, sounds promising, but there are always risks. Let's talk external factors first. Bitcoin price. Still a huge dependency.
Absolutely. Bitcoin's price and the network difficulty directly impact the profitability of that whole first pillar. It's outside their control.
And the AI side. It's not like they have that market to themselves.
Not even close. They're going up against the hyperscalers, Amazon, AWS, Google Cloud, Microsoft Azure. These guys have enormous scale and existing customer relationships.
That's incredibly tough competition.
Yeah.
So it puts a lot of pressure on their execution.
Exactly. Which brings us to the internal risks. Managing two very different, very demanding businesses, crypto and cutting-edge AI infrastructure that's complex.
Capital intensity, we mentioned.
Right. Huge CapEx needed constantly for data centers, for more GPUs. Then there are supply chain headaches, getting all that hardware, and just the sheer operational challenge of building and running these things fast, reliably, and meeting regulations.
Execution risk is high then. And if growth doesn't meet the probably quite high expectations baked into the stock price.
Then you hit valuation risk. The market is likely pricing in a lot of AI success. If they stumble on the execution, the valuation could take a hit.
So wrapping this up, the big picture for someone looking at Iren.
You've got strong tailwinds, no doubt. Global AI spending is booming, demand for compute is massive. But success really rides on their ability to execute this complex, capital-intensive build-out across two demanding sectors while fighting off giants. Flawless execution is pretty much required.
Okay. A high-stakes balancing act.
Precisely. And maybe a final thought for you to consider. We talked about that NVIDIA preferred partner status. How much tangible value does that really offer against the sheer scale of capital they need? Does it mean better payment terms, real cost savings on GPUs, or is it just about getting prioritized in the queue?
A key variable indeed.
Understanding the concrete benefits of that partnership versus just the hype, that could be crucial for assessing their true financial footing going forward.